This abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change. But the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, The southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. and that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. Right to the numbers. We'll give you the why in a moment. Right now, the Dow down 734 points, a drop of 2.1%. S&P down 93, a drop there of 2.1%. NASDAQ down 385, down 2.6%. Bitcoin is plunging, down 7.4%, and gold now up by 0.5%, 10-year yield 1.30%. Crude West Texas Intermediate tumbling 1.9%, $70.58 a barrel. S&P marking its biggest intraday decline in over 6 months amid growing investor jitters about China's real estate crackdown potentially sparking a financial contagion. Again, the S&P 500 index is down 96, a drop there of 2.2%, close to session lows but off the bottom. The NASDAQ 100 index down 2.6%, Russell 2000 down now by 2.7%. Well, as for the broader market backdrop, Katie Kaminsky is Chief Research Strategist at Alpha Simplex Group.
The thing that worries us the most is inflation, supply chain disruptions, and sort of an economy that's changing in the wake of a very stressful environment. And I think with high valuations, the Fed meeting tomorrow, we have a perfect storm for a very difficult day today. And so I think for us, it's much more of a sort of underlying problem that is much more economic in nature and pervasive as opposed to something simply financial.
Coinbase Global bowing to pressure from American regulators and tabling plans to launch a product that would pay users interest for lending out their tokens. Coinbase down now by 4.2%. Among some of the other crypto names, they are moving lower. Galaxy Digital Holdings down 13.1%, Riot Blockchain down 4.8%, and Marathon Digital down 4.6%. S&P down 2.2%, and that's a Bloomberg Business Flash.
All right, Charlie, thank you so much.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from our Bloomberg Interactive Brokers studio, we are streaming on YouTube. It is Monday, September 20th, 2021. Carol Masser, my co-host Tim Stenovic, off today. Joining me on this Monday, Bloomberg News West Coast correspondent Ed Ludlow. He is out there in our San Francisco bureau. And Ed, you know, some days we go, we're not quite sure what the theme is today, what the main story is today. It's all about the financial markets.
China, I'm diving in at the deep end with you, Carol. What a week to talk about financial markets. I thought you'd let me off easy, but here we are.
It's going to be all about the markets. We're going to talk about that risk-off trade that we're seeing, those concerns over China's real estate sector, a Fed tapering. We're worried about that as well. We've got that FOMC meeting on Wednesday. And then we're going to also talk about the taper that will really bite into U.S. growth, that story on the Bloomberg terminal. First up, though, let's get to the Market Drivers Report. And let's set your Business Week agenda on this Monday. Joining Ed and me, Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, right here in our Interactive Brokers studio. Dave Wilson, Stocks Editor at Bloomberg News, also in our Interactive Brokers studio. Quickly, though, Dave, just for a set, how bad is the selling? And if you're shorting this market, you're kind of happy.
Yeah, you are, but it's pretty broad-based. All 11 of the main industry groups in the S&P 500 are lower. The more defensive areas of the market, utilities, real estate, consumer staples, food, beverage, tobacco, and healthcare, are holding up better than the more economically sensitive areas of the market. Energy and financial stocks leading the way down here. But in terms of individual shares, here's something that jumps out. There are 505 stocks, 500 companies represented in the S&P 500.
Right.
All but 33 of them are down.
Yeah,
that's how broad-based it is.
Risk-off trade. So, Gina Martin-Adams, you watch the cycles. Are we beginning, and it's not just the beginning, the last 2 weeks we've been trending lower, but is this the sign that we're going to continue to see more of a lower downward trend here when it comes to U.S. equities? And do earnings and fundamentals among those big companies and companies in general here in the U.S. support that?
I think that we've been in the process of turning downward for a while now. As you mentioned, we've been in this sort of state of weakness, incremental weakness for the last several weeks. It's just been kind of a market that's been chipped away at until today, which is obviously significantly more volatile than the days we've seen in the past. I do think a big part of that 2 to 3 week sell-off that we've been in has been about a little bit of deterioration in the fundamental outlook, mostly because inflation pressures are still too high, and companies are starting to tell us that their margin outlook is maybe not as strong as it used to be. And analysts were really thinking that inflation was 100% transitory. We were going to get a spike, it was going to go away, and we could move on. But we're now starting to see estimates decline for about a third of the number of the companies in the index.
Is that significant?
Yeah, it's relatively significant because it's at least created a stall in the forward momentum of operating margin forecasts for the index at large. At the same time, there are just a lot of risks out there from the policy level, right? You've got the taper coming from the Fed, and we don't exactly know when or how much that's going to be, but we're going to get communication about that. You've got tax increases. I mean, we're seeing things like we're going to tax the ETF industry, we're going to close loopholes there, we're going to tax carried interest, we're going to tax buybacks. It's everywhere.
The buybacks thing I thought is interesting.
Yeah, not to mention corporate tax rates are likely to go higher. So we've got to think about, we're thinking about that to a degree. And then there's a potential government shutdown. I'm told. It's hard to kind of get your head around a lot of the different policy risks that are emanating out of Washington right now. And considering how far we'd come from our lows, the market was just vulnerable to some pairing of positions at the very least.
Gina, you and I were just talking about the end of last week, the September swoon. So many things top of mind, the Fed, inflation. You wake up this morning, how different is your outlook for the equity market this morning from what it was on Friday? How much has changed over the weekend?
Yeah, not anything for me. We've been, as you mentioned, and we've been talking about this September swoon for a while. And as a matter of fact, we even started talking about the margin risks all the way back
History
in
tells
May.
you it happens in September.
Yeah, it does. It does. And the margin outlook has been deteriorating for months now. So we've been sort of looking to this risk as likely to pop up for equities for quite some time. It's finally popping up and allowing the market to sort of rationalize what were a little bit exuberant expectations. I do think that there's maybe more risk than we had hoped for emanating out of China. Prior to this weekend, it was really predominantly a story of tech regulatory risk. And certainly the real estate risk was bubbling up in the background, but now it's very front and center, adding to the pressures coming to the U.S. market from overseas.
Well, this is the question, Dave. Is this another long-term capital management? Is this a Lehman moment? These are the stories that I'm seeing on the Bloomberg as we talk to our guests. Can China contain this so it is truly a China problem, or we're all interconnected and at some point we're going to feel this more globally?
Yeah, that's
especially
the
if the
question.
Chinese economy slows down.
Sure, no doubt. And I tweeted out John Arthur's latest column for Bloomberg Opinion, which really addresses those points. He's not concerned about this being the possible worst case, but it's not great in terms of what happens in China and what the spillover effects might be. So, it's definitely going to be something to watch. And you have to bear in mind in all this, the China Evergrande, this real estate company, has not exactly been in the greatest of financial shape for a while. You go back and look at our coverage, and you see around this time last year, there were concerns about whether it could keep up with its debts. It's just that now things are kind of coming to a head. There's something like $120 million of interest payments due on a couple of bond issues this week. And we'll see if that ultimately breaks the back of this company with its $300 billion or so in debt.
Yeah. Gina, just quickly, 10 seconds. Are you worried about contagion?
Not yet.
Okay.
I think that China's actually made some moves to improve liquidity conditions and reduce the reserve requirements. So I think that they're on top of this, but, reserve judgment for a future day.
Exactly. Stay tuned, everyone. Gina Martin Adams of Bloomberg Intelligence. Thank you. Dave will be back with his chart of the day. Let's do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, Ed, it's 30. Tickets for a new Universal Studios theme park in Beijing sold out within 30 minutes of going online ahead of its grand opening today. The surging demand underscoring the challenge President Xi faces in dampening the appetite for celebrities, many of whom visited the park's attractions in the lead up to its public opening. Those tickets selling big time. All right, a lot going around when it comes to world and national news. Let's head to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol. Pfizer says its COVID-19 vaccine works well for children ages 5 to 11, and the company says it will seek emergency authorization for the vaccine to be given to that age group as soon as possible. But Dr. Gregory Poland, director of the Mayo Clinic's Vaccine Research Group, says there are still some questions he wants answered.
We know we can protect children with a vaccine, but what will be the distribution of side effects that occur, and what will that balance between risk and benefit look like?
Poland tells Bloomberg he wants to see data about the side effect of the Pfizer vaccine in young boys and whether it causes any heart conditions that have been detected in some older men. The COVID-19 pandemic death toll is expected to soon surpass that of the 1918 influenza pandemic.
A century ago, 675,000 people in the U.S. died from the influenza pandemic. Today, the death toll from the coronavirus pandemic has increased by an average of 1,970 people each day over the past week. This despite the availability of vaccines. Some 70 million eligible Americans have decided not to get the shot. A CDC study shows that people who were not fully vaccinated are more than 10 times more likely to be hospitalized and 11 times more likely to die of COVID-19. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden will be speaking in the next few days with French President Emmanuel Macron and hoping to patch over a rift between the countries concerning a U.S. deal to sell Australia nuclear-powered submarines. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week on this Monday. Carol Massar, and joining me is, of course, our Ed Ludlow in for Tim Stenovic. And Ed, we keep looking for signs of our world turning back to normal, quote unquote. And one sign that it is we've got New York City getting ready and returning to hosting UN Week because we have not seen that happen. It was happening virtually amid the pandemic.
Yeah, and you have so many diplomats looking forward to apparently crowding into hotels, side rooms for side meetings.
Traffic.
And it's psychologically, right? You want to go into a meeting feeling confident about the state of affairs with the virus, but it's probably for many of them the first time they've had the opportunity to do so.
Yeah, exactly. And we're going to be watching so many different metrics, right? Hotels and restaurant associations, they're seeing some modest impact from this already. We know Broadway's reopening. I see it as I walk the streets, more tourists coming back. And we know the White House has made some moves to help when it comes to tourism and travelers from the EU and the UK. What's interesting, though, is there's also that concern, as we are with any major event, Ed, that will bringing more people here, even if they're vaccinated, could it potentially lead to another COVID spike?
Yeah, and the data for what happens to those that do get COVID is worrying, right? We saw mortality rates rising in July, particularly among older age groups. And I'm not making any link between the age of diplomats, and those being more susceptible to COVID-19. But it's always there. There's always an element of risk of going too prematurely and then bringing back an outbreak into a city like New York, which, again, psychological could be really damaging for the city's reopening.
Exactly. And we know that there are breakthrough cases, even in those that are vaccinated. What's interesting, a little perspective, which we always love here at Bloomberg, while 10,000 delegates typically descend on Manhattan in a normal pre-COVID year during UN week, it's going to be very different, Ed. It's going to be about 1,000 this time. Countries have apparently agreed to limit their delegations to 7 people inside the UN building, and side events will be mostly virtual. So once again, it's going to be very different. We're not quite back, as we all know. All right, you are listening to Bloomberg Business Week. Carol Massar, Ed Ludlow, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Major test today for the buy the dip mentality. The Dow, the S&P, NASDAQ 100 index, all selling off right now, down by just about 2.5% or more. The global stock rout sparked by investor angst over China's real estate sector, and Fed tapering is deepening, with U.S. stocks falling more than 2.5%. European equities tumbling the most in more than 2 months. S&P now down 109. That is the low of the day, down 2.5%. The Dow is down 843, down 2.4%. NASDAQ tumbling 439 points now, down by 2.9%. The Russell 2000 is down by 3%. 10-year yield 1.30%. Spot gold up 0.4%, $17.61 the ounce, while West Texas Intermediate crude is down 2.5%, $70.18 a barrel. FedEx plans to spend more than $100 million to improve delivery van safety and reduce costs from accidents, potentially dragging on short-term earnings as the courier faces pressure from rising wages and other expenses. FedEx shares down now by 2.4%. FedEx will report earnings tomorrow. Recapping, stocks lower, S&P down 109, down 2.5%. Got to keep it locked into Bloomberg Radio for the very latest to see how things shake out at the close and, of course, how Asian markets react tonight. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, appreciate that update, Charlie. And we do have, as Charlie mentioned, stocks pretty much at their worst levels of this session. Well, don't forget, we get another Fed decision on Wednesday, and with investors nervous about the Fed's eventual tapering ahead of that policy meeting, we're going to tell you about the taper that will really bite into U.S. growth. This is a must-read today, I think, Ed. Let's get to Bloomberg News economics reporter Rich Miller. He writes about this. Rich joins us on the phone from Washington. Hey, Rich, good to have you here with Ed and myself. So we are all focusing on what we're going to get from the Fed on Wednesday. We're wondering if they're going to be more specific about when they will pull back on some of their asset purchases, their so-called tapering, whether or not we'll see that. You say there's something else we have to be watching when it comes to tapering. What is that?
Basically, the disappearance of all this support we've been getting from Washington in the form of, stimulus checks, grants to small business, money for state and local governments, the whole panoply of things. That's all basically going away. It started going away in the second quarter, and that arguably is going to have take a bigger bite out of growth over the next year, especially towards the end of next year, than the taper by the Fed. Because, remember, the taper by the Fed is they're going to be cutting back on the amount of stimulus they're injecting into the economy, but they're still going to be injecting stimulus. What you're going to see on the fiscal policy side is that they're actually going to be the stimulus is going to disappear.
Rich, what's difficult to kind of make sense of is these measures were supposed to be temporary anyway, right? In terms of payment support for employers, in terms of benefit and subsidy for those hardest hit by the pandemic. Why did economists and indeed the U.S. government not see this coming sooner?
Well, I guess, the government has seen it coming sooner, but the sheer magnitude of it is what's in a normal recession, you might have, some of this and then it disappear. But this is a sheer magnitude. This is going to be the biggest swing in the deficit, i.e. the biggest fall in the budget deficit from one year to next since basically 1946 after the war. So on its own, it's going to be a huge contraction. Now, I think the point you're making is, there's going to be offsetting factors, right? People have built up savings during the pandemic because they couldn't go, on expensive vacations, etc. State and local governments got a lot of money from the federal government, and they haven't spent all of it. Companies need to build their inventories. But even with all that, some economists see, this really having this what they call fiscal drag, really having an impact on growth. And one economist I quote in the story, Wendy Edelberg at Brookings, say we might even see a quarter or two towards the end of next year or into 2023 where we don't grow at all.
Wow. I mean, that would certainly shock the markets. What's interesting, too, Rich, in a story like this is always perspective. So all of this fiscal stimulus or stimulus that came from the government, I mean, it was a lot more than what we got from the Fed, correct?
Yeah, I think even the Fed, when you hear Fed Chair Jerome Powell, talk, he gives great credit to Congress for acting quickly, especially with the CARES Act, the first act.
Mm-hmm.
But he acknowledges that the Fed lowered interest rates, but it didn't hand out money to people, right? And the Fed did buy bonds, but he acknowledges that the fiscal thrust, the fiscal emergency stimulus was what really helped during the pandemic.
Rich, you flick at this in the story, but it's going to be painful for some people and potentially politically tricky for Biden, right?
Yeah, if these economists are right, this slowdown is going to be happening just as we're heading into the November midterm elections, and
unless he gets his big plan through, right? I mean, that's the other factor in all of this.
I mean, that is a factor, but what's kind of lost in the talk about the big plan, and there's a lot of big numbers thrown about, but that's spread out over 10 years. And
it skips 2022.
Exactly. So it is going to help, over a longer period of time, but it's not really going to help next year. And some folks on Wall Street are saying, yeah, well, we might get the tax increases before we see the benefits of the infrastructure spending, and that would hurt the stock market too.
It does sound like, just quick, Rich, just got about 30 seconds here. We'll also get a truer picture of the economy, right, as we start to back off of all these stimulus efforts.
Yeah, definitely. Once we come off the emergency support, we're going to have to see how much underlying strength is there, and hope it's there, and we can sort of stand on our own 2 feet, so to speak.
Right, which you wonder if, certainly ahead of the FOMC meeting, is, the real economy is what Jay Powell and company are looking to see. Rich Miller, it's a must read. Thank you so much. Rich Miller, economics reporter at Bloomberg News, on the phone from D.C. on his story, The Taper That Will Really Bite Into U.S. Growth Isn't the Fed's. I mean, and this is a really timely story and something we need to be thinking about as those policy makers get ready to meet and maybe update policy.
Yeah, and for the real economy, for the people that have lived on the subsidy, lived on the benefit, lived on the PPE checks, you wake up one day and it's gone, and you wonder how that really impacts spending going forward.
All right, something we're going to continue to track. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Monday, where we are seeing a fair amount of selling when it comes to the U.S. equity trade. We'll get those numbers in just a moment. We're going to also get some numbers when it comes to the COVID impact and check in with the founder and CEO of Babylon. That's an AI and digital health company. So looking forward to that. First up, though, let's get to that sell-off, Charlie Pellet.
And indeed, right to the numbers, Carol Master, because that's what you need to know. The S&P right now, worst level of the day, down 115 points now. The selling intensifying, down 2.6%. Dow Industrials plunging 881 points, down 2.5%. NASDAQ down 473, drop there of 3.1%. The selling is broad-based. NASDAQ 100 index down 3.1%. Russell 2000 now down by 3.4%. Dow Transport's down by 2.1%. 10-years up 16 seconds, 10-year yield 1.30%. The Dow, the S&P, and NASDAQ at or near session lows. The global stock rout sparked by investor angst over China's real estate sector and Federal Reserve tapering deepened today. Stocks falling more than 2.5%. European equities tumbling the most in more than 2 months. Do want to pass along a headline for you from the Bloomberg Professional Service. The UK bus group National Express said to be weighing a bid for rival Stagecoach. Stagecoach owns buses and rail companies in the United Kingdom. Here in North America, it owns Coach USA, Coach Canada, and Megabus. Gold up 0.4%, $17.61 the ounce on gold. West Texas Intermediate crude down 2.2%, $70.37 a barrel on WTI. Gold, by the way, up $7.50. Bitcoin down now by 8.4%. Pfizer and partner BioNTech say their COVID-19 vaccine is safe and produced strong antibody responses in children ages 5 to 11 in a large-scale trial, findings that could pave the way to begin vaccinating grade school kids within months. Reaction from Amber D'Souza, who is a professor of epidemiology at the Johns Hopkins University Bloomberg School of Public Health.
Well, we have been waiting to see the data in children, so this is really exciting to see the beginning data come out. With an infectious disease, it's very hard to stop transmission without also vaccinating children because they can continue to spread it. So everything we know about the biology of SARS-CoV-2 suggests that it would likely be effective. These vaccines would likely be effective in children, but this is the first data, and it's important to figure out the right dose. We need to look through all of the data that's provided in the trial, but this seems like a really exciting development.
Dr. D'Souza with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. GM and battery maker LG announcing a fix for the recalled Chevy Bolt. Developing story. We'll have more details on that as it becomes available. Briefly checking some of the vaccine stocks that we follow. Pfizer up less than 0.1%. BioNTech, the ADR is down 6.7%. AstraZeneca up 4.5%. Moderna down 2.2%. J&J, Johnson & Johnson down 1.2%. Recapping steep losses for the U.S. stock market. S&P down 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hard to find those gainers today. All right, Charlie, thank you so much. Appreciate that. Well, the U.S.'s COVID-19 pandemic could surpass the number of dead in the 1918 influenza pandemic as soon as today. It's a milestone many experts say was avoidable after the arrival of vaccines. There is a lot going on when it comes to COVID-19 and the vaccine rollout and the boosters. Dr. Ali Parsa is the founder and CEO of Babylon. It's an AI and digital health company, and he joins us on the phone from Victoria, Canada. Dr. Parsa, it is so nice to have you here with Ed Ludlow and me. How are you? And while you are not a medical doctor, you have been involved in the healthcare world and, safe to say, disrupting it. Through your lens, what is it about this healthcare crisis that continues to really strike you?
Thank you for having me. What strikes me above everything else is that how quickly, in history we've never done this before, we managed to come up with a solution, science managed to come up with a solution that can contain, not necessarily cure or completely save, but contain the problem. And it is now up to us as a population to take that on. I mean, you mentioned about the effectiveness of the vaccines now in children. We must remember that vast majority of the deaths and hospitalizations right now is for the unvaccinated. And the real debate now is how can we persuade more of our populations to take the vaccines and to try and start to put some normality into our lives. This is starting to become an unnecessary crisis for our hospitals today. It was a very serious crisis a year ago, but today we need to start seeing the light at the end of the tunnel. And for that, we all need to participate.
Dr. Ali Parsa, when I was reading about Babylon, it kind of clicked in my mind because I think back to the early days of the pandemic, and when you needed to go and seek medical advice, the advice was to stay away in the event that you had any symptoms that could or could not be classified as COVID-19. They wanted people contained. How significant has the pandemic been for a business like yours? Is yours a story where the COVID pandemic has accelerated a trend that was already happening? Is telemedical health care here to stay?
Absolutely. I mean, almost everything throughout our history was almost in preparation for this moment. But it goes beyond telehealth. Telehealth is just the ability to see a doctor on the other side of a mobile phone or a computer if you wish. But if you see that doctor in silos and if you see them in an unconnected health system and if you don't have access to it because it's not affordable, it will be equally as unaffordable and as unconnected if it was on the other side of a mobile phone. What was almost lucky for us was that we were born in the UK where the physician, your family physician, is expected to be with you at every touch point of healthcare. Therefore, we needed to create a model that is not just there for emergency care or urgent care, but end-to-end at every touch point. And when, of course, COVID came, that necessity for continuity and a company or a health service that could be there all the time for you became really important. And as you may have seen, we announced last week that we have been growing 471% in the first half of this year compared to last year. But that trend was always there. We always grown in 3-digit percentile points since our inception.
Dr. Parsa, just got 20 seconds. Will the market volatility in any way derail your plans to go public via a SPAC this year? Just quickly.
Yes, we are. We're continuing to do so, and we were hoping to do so shortly as soon as SEC approves it and allows us to go.
All right. We hope we can get you back soon, too, especially as you do go public and learn a little bit more about your business, because as you say, it's not just telehealth. You guys are doing a lot more in terms of disrupting how we are doing healthcare. Dr. Ali Parsa, he is Chief Executive Officer at Babylon. He joins us on the phone from Victoria, Canada. All right, let's get back to world and national news on this Monday. Over to Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. President Biden to look for ways to ensure that people are protected from extreme heat. He calls it an imminent threat to millions of Americans. He's ordering an all-of-government campaign to help deal with the effects of climate change, including rising temperatures. The U.S. just had its hottest summer on record. Pressure is building on world leaders to increase their efforts to fight global warming. Bloomberg's Ann Cates has that story.
It's coming to a boil this week at the United Nations. UN officials are corralling 35 to 40 world leaders behind closed doors to coax them to do more to fight global warming. There's a deadline in just 6 weeks. That's the big international climate conference in Scotland. And UN officials say they worry it might fail. This comes after President Joe Biden delivered them the same message last week. This summer has seen a drumbeat of devastating wildfires, floods, heat waves, and hurricanes. In Washington, Ann Cates, Bloomberg Radio.
The FBI today has been searching the Florida home of Brian Laundrie, the boyfriend of Gabby Petito, who's been missing for weeks. A body was discovered at a campsite yesterday on the edge of Grand Teton National Park near Jackson Hole, Wyoming, and authorities believe it could be Petito, who had been seen in the area. An autopsy will be conducted tomorrow. Laundrie is missing, and police have searched the grounds of a Florida nature preserve after his parents said he may have gone there. Police in Virginia are on the hunt for a suspect behind a double shooting at a high school this morning. Police say a 17-year-old male and female were shot at Heritage High School in the city of Newport News, but their injuries were not believed to be life-threatening. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We have a potpourri of stories that we want to bring you. Some of it has to do with money being raised, companies coming back, what's old is new again. But first up, let's get to this story by our Heather Perlberg and Shonali Bosick about Steven Mnuchin. Former Treasury Secretary Steven Mnuchin has started his next act with a multi-billion-dollar fund for private equity investments. We're talking about a $2.5 billion fund. He made that raise.
Well, if you're going to raise funds, as the story points out, it doesn't hurt to have been part of administration that had close ties to Middle East governments. And of course, according to the sources cited in the story, you know, the Saudi Public Investment Fund, this sort of juggernaut of capital deployment, is going to be participating. So yeah, it was worth the work experience on his CV, put it that way.
Yeah, listen, we've seen this story before, right? You work in government and you go out to the private sector, a lot of them to the financial sector or in the corporate world, and they can make a lot of money, and they can also raise a lot of money for their new institutions that they work for. Liberty, by the way, this fund was founded this year. It's focusing on tech, financial services, and fintech, as well as new forms of content, according to a statement back in July announcing that, I guess, an initial $200 million investment in a cybersecurity business. So that's going on. I don't know if you saw, too, it sounds like Bill Gates raised more than $1 billion in corporate funding for breakthrough energy catalyst, drawing on BlackRock's Larry Fink and Microsoft's Satya Nadella to rally support for some of the world's most demanding clean energy projects. You know this, Ed. Bill Gates, clean energy, this is something he's been focusing on.
Yeah, I mean, in the time that I've lived in the Bay Area, I moved to the United States, I've only ever really known Bill Gates and met Bill Gates as an investor. You know, that is the interaction that I've had with him. And it's been focused, as you say, on clean energy, on vaccines, on medicines. And there's been very little discussion about technology, Microsoft. Very interesting.
Yeah, it is. And listen, one last thing, as I said, a potpourri of stories. I don't know if you saw this by our Sarah McBride on the Bloomberg WeWork, planning to begin trading its shares around October 21st on the New York Stock Exchange, nearing the end of a years-long journey to the public markets. Ed, they're coming back.
They come full circle.
Stay tuned. This story, I'm sure there'll be more. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are tumbling on macro concerns. We are at or near session lows right now with the Dow Jones Industrial Average down 866 points, down 2.5%. S&P plunging 113, down now by 2.6%, while the NASDAQ Composite Index is down 464 points. That is a drop of 3.1%. The global rout sparked by investor angst over China's real estate sector and Federal Reserve tapering is deepening. U.S. stocks down the most in almost a year. S&P, as I mentioned, down 2.6%. We've got the 10-year yield at 1.30%. Gold up 0.5%. West Texas Intermediate crude down 2.1%. $70.43 a barrel. An ounce of gold, by the way, at $17.62. Bitcoin, a major story today, plunging by 8.6%, taking a lot of crypto-related names with it. Galaxy Digital Holdings, for example, down 15.9%. Riot Blockchain down 7.7%. And Marathon Digital Holdings is plunging 7.6%. Stay with Bloomberg for these fast-moving markets. Stay with Bloomberg Business Week right through the close to see how things shake out and, of course, how Asian markets react tonight. Recapping S&P down 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are up to speed. We're going to talk in just a moment about the Sooner Than You Think Bloomberg Business Week issue that will be out later this week. But in the meantime, we do want to talk a little bit more about the markets. With us is Bloomberg Business Week editor Joel Weber and, of course, Ed Ludlow, my co-host on this Monday out there in San Francisco. Guys, Charlie just giving us the numbers, just bouncing off our lows. But one of the things we keep focusing on, Ed, is that we are concerned about whether or not we're going to see buyers come into the market. Buyers coming back into the market, especially as the S&P hits its 50-day moving average on the downside, is what we have seen and what has propelled this market higher. We'll see whether or not it happens today. Didn't happen on Friday.
Yeah, and it's not a new question. I mean, discussing at the end of the last week, the S&P 500 down in 10 out of the 13 sessions we've had in the month of September. There's a lot on top of investors' minds. This is broad-based. The Russell 2000 down almost 4% now, most since March. So this is a pretty broad-based sell-off. And when did the buyers come in, the dip buyers? It's hard to say.
Joel, what I love about, too, though, you guys are having an issue coming out, and it's just a reminder that companies are still doing things, making investments, making decisions, despite what goes on in the market.
Yeah, obviously the markets is going to be perhaps a theme of the week if this keeps up. But obviously the idea that companies and individuals are thinking farther afield, often something to keep in mind just for perspective's sake, right?
Right, exactly. And certainly something we'll keep on. And you make the point that whether or not that trend line continues, we've had stocks down 2 weeks in a row, but they're not falling apart.
Another story that I'm interested in all this is sort of the retail element, right? Because the retail element is the thing that stepped up to bat whenever this has happened before. But like Evergrande, less of a retail story internationally. Obviously, it's a big deal domestically in China, but you know, it's really an institutional story. And so will a retail audience look at this as a buying opportunity?
That's a really good point to see whether or not we start to see that. All right, we'll continue to track the markets. Of course, Charlie giving you the numbers, and we're just hovering near our lows of the session. In fact, just coming off our lows. One other story that we want to get to, and as we mentioned, it will be in the upcoming Sooner Than You Think Bloomberg Business Week issue. Joel is with us, and also joining us from Switzerland is Bloomberg Business Week writer James Tarmy, and we're talking about, Joel, tall buildings. Actually, they're super tall buildings.
The super tall ones. And here in New York City, there's been a couple that have gone up. And what James' story is really interesting about is, like, really when these buildings started to go this big, nobody had done that really before, right? Yeah. And so they were kind of having to learn almost on the fly, and that has led to some lessons. And we'll talk about those lessons. And then the other big takeaway that I thought was just amazing is that we're going to start seeing buildings go even higher, which is really crazy to me, because I just get, my stomach kind of does a little, dance.
Don't look down. Don't look down.
So James, what have been some of the problems that have happened with these super tall buildings?
Well, I think one of the biggest problems is that people don't know really what they don't know. And so every time that they push the limit, they find out something new, which is fascinating if you look at it from an engineering standpoint. less exciting if you have spent a tremendous amount of money to live in one of these buildings and then discover that, well, actually you're living in a 2.0 building and 3.0 or 4.0 buildings are going to be the ones that fix it. So, we can go all the way back to something like the Sears Tower, which was incredibly high and which was just a feat of engineering and which was built with really not much wind tunnel modeling. And so they only discovered when it was constructed that there were basically wind vortices that were rattling the building and causing things to break. And it only kind of got worse from there as people discovered the full extent of what wind does to a building at extremely high height.
So I recently went on vacation to Chicago, and I took the official Chicago architecture tour. And of course, one of the features is the Willis Tower, and it can sway 3 feet, on any day with the wind coming off Lake Michigan. And anyway, now that I'm done bragging about my vacation, James, my story, my question rather is, how important is it to have the bragging rights of the tallest super tower in a city? How linked is the skyline to the status of a city like New York, like Chicago?
Well, I think it's actually 2 different questions, really. One is from the developer standpoint, right? If they are able to say that the buyer of the building's apartments has views that are unlike any other, they can command, at least in theory, a premium. And then there's another component of it where you hit on it exactly, that it is not simply about economics when it comes to buildings that are not simply residential. There is a tremendous component of bragging rights to it. And it's been that way since the Empire State Building became this symbol for American prosperity. Now, you see it as kind of American dominance of a lot of different things sort of wanes. In the 90s, you see Asia becoming the place where super tall towers are built. And a few people with whom I spoke actually made the excellent point. Who ever heard in America of the Petronas Company until the Petronas Towers were built? Mm-hmm. And you can go from there. It became it's not necessarily a price efficient way of building when you're building all the way to the tallest building in the world, but you can, in a certain respect, consider it a marketing expense.
Okay, so let's geek out a little bit about the engineering that it takes to go super tall, because they've been able to do the ones that have been super tall, we now know what it takes to go even taller. Let's start with concrete, which you can now get 3,000 feet into the air.
Yeah, so there are a couple of issues with concrete which people have consistently been solving as they go higher and higher. The big one is that it needs to be a lot stronger for it to go that much higher. And the good news is that when it gets stronger, it also gets stiffer, which keeps a building from swaying. So the advances are pretty staggering. You were looking at in the 1980s, PSI is a measurement of pressure that the concrete can withstand. You're looking at 6,000 PSI for like the top of the line buildings. Now you're looking at 3-4 times that amount easily. And so that is one component of concrete that is critical to these super tall, super skinny towers. That's the other thing. You can build as tall as you want if you're building it, incredibly wide. If you're trying to build a super skinny tower, that's where the strength of the concrete comes in. Then the other component of it is that you have to be able to pump it and it has to stay liquid, because people have discovered that it sort of firms up as you're pumping it, right? Because
it's like, hey, Joe, we got a problem. The concrete's hard. We've only made it to the, 500th floor. It's a great read, and as Joel mentioned, it's a fun story to nerd out on about the technology and what they have to do to make this happen. Check it out in the upcoming issue of Business Week magazine. James Tarmy of Business Week, along with the editor of the magazine, Joel Weber. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. Steep losses for U.S. stocks, lows of the day as we move into the final hour of trading. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
It is natural for this kind of pullback to happen, and we've got a lot of other catalysts besides slowing earnings growth that are starting to perk up to help catalyze that downward move. So, look, I am actually somewhat hopeful that we can just go ahead and get this done and get this out of the way and then move on. I never want to see a down market, but I do think that this is just a natural part of the process when you come out of a recession, that you have to have this digestion period.
The global stock rout sparked by investor angst over China's real estate sector and Federal Reserve tapering deepened today. Stocks falling the most in almost a year. The S&P 500 index right now is down 2.6%, the biggest one-day slide since October of 2020, a test for the buy-the-dip mentality as the gauge jabs at its 100-day moving average. Keep it locked in to Bloomberg Business Week for the very latest. Stay with us right through the closing bell. Our coverage will continue, and of course, we've got Daybreak Asia tonight to see how Asian markets react. Again, the S&P is down 2.6%. The Russell 2000 lower now by 3.3%. NASDAQ 100 index down by 3%. Bitcoin, a major story, plunging now by 8.7%. Europe's biggest transatlantic airlines and airports reacted jubilantly today to a U.S. move allowing most vaccinated foreigners to enter the country, ending a ban that has been in place since March of 2020. It is a mixed day for a lot of U.S. carriers with transatlantic service. UAL, for example, just turning higher right now, virtually flat on the day, up by 1 cent. We have got American Airlines up 1.5%, Delta up by less than 1/10, and JetBlue up by 0.5%. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week, brought to you by SEI. Asset managers do not get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage at SEIC.com/IMS. You are listening to Bloomberg Business Week. Tim Stenovic is off. In his place, Ed Ludlow of Bloomberg News, joining me from the West Coast. And top of investors' minds, you know it, we've talked about it. How far will President Xi Jinping go with his crackdown on China's real estate sector and more broadly in the economy? Well, to dissect it, back with us is Bloomberg New Economy editorial director Andy Brown, who continues to explore and write about the growing Beijing crackdowns, writing this weekend about how it now includes the casino industry in Macau. Andy, by the way, former China editor at the Wall Street Journal, and he's here in our Interactive Broker studio. So, Andy, you do write this weekend about what's going on in Macau. Once again, President Xi it feels like going after some of the evils of the Chinese society, or so it feels.
Exactly, Carol. I mean, President Xi Jinping sees himself as a historical figure on a par with Mao. And he is now in the process of trying to re-engineer Chinese society, to fundamentally change the way that China's society works, to make it less unequal. This is his slogan, common prosperity. And beyond that, to correct a lot of what he would see as being unhealthy tendencies in Chinese society. In other words, social vices. And gambling very much fits into that category.
There was this fantastic line in your story that gambling revenues from Macau are 6 times what they are from the Las Vegas Strip, which gives you a sense, right, of how, A, crucial that section of the economy is, but B, how far he's going. I mean, is this just a question of profits take a backseat to ideology when it comes to President Xi's mindset?
That's definitely part of it. You know, the communists have never liked gambling, all right? They banned it. They banned the horse racing as soon as they took over. They saw this as a remnant of the old society. And they inherited gambling in Macau from the Portuguese. when they took over Macau, which is a Portuguese colony, in 1999, and they've sort of tolerated it, although their tolerance is wearing very thin. And in fact, when Xi Jinping took over in late 2012, one of the first things he did was launch this anti-corruption campaign, and casinos in Macau were early targets.
Well, I do wonder, Andy, if the inequalities that they weren't existing in the Chinese society, would we be going through this right now with President Xi?
Well, he's a populist figure, and he considers himself to be a Mao-like figure, and social equity is a very important part of his campaign.
But if there weren't the inequities in Chinese society, would we be going through this with President Xi right now?
Well, it's not just the inequities. I mean, he's addressing in a very decisive way a lot of problems that exist all over the world in different societies. As an example, he's going after the video gaming industry because he's perceived that Chinese kids spend too much time addicted to online video games.
Which isn't so different from what we're seeing in some of the developed world, even if you think about big tech, right? What we're seeing in Europe, what we're seeing in the United States.
Right, exactly, except he's going after it in a far more peremptory, draconian way with very little public consultation and certainly no media debate. This is top-down re-engineering, definitely not democracy from the bottom up.
Join the dots for us here. What is the link between what's going on with China's gambling crackdown and Evergrande and the property market?
So here's the link, I think, which is this, that in re-engineering Chinese society, he's got to also re-engineer the economy. And the reason for that is that the big drivers of economic growth in China, most particularly the housing market, tend towards unequal outcomes. So if you were lucky enough to have bought property in one of the big Chinese cities 20 years ago, or actually any time over the last 20 years, you would have doubled, tripled, quadrupled, quintupled your money. I know this for a fact. I bought a place in Beijing in 2004 and sold it 2 years ago and did very, very well. However, if you are now a young family in one of those large Chinese cities, you're probably not able to afford a place to live.
Right.
And if you are, you don't want to have kids because you can't afford it. And that's another big motivating factor for Xi Jinping. There's a demographic issue here as well.
Well, it's so interesting in China, right? How it went from, one-child policy to now encouraging families to have more kids.
Right, but who wants to have 3 kids in a city
if
you can't afford it? You can't afford the education.
Feels like we're talking about San Francisco or New York, or pick your city here in the United States to some extent.
Or indeed any big city now, anywhere in the world.
Well, that's another part of it, and we'll talk a little bit more about China, but there's another story on the Bloomberg that just talks about how housing now is really a global problem, where there are so many around the world who cannot afford to live in many cities in their country. And then you're seeing, as a result, either hopefully policies change or upheavals or uprisings.
Indeed. Governments are falling as a result. We saw the Swedish government collapse earlier this year, and one of the reasons was that it tried to get rid of a cap on rents. The Canadian election coming up later this year is being fought in part on the issue of housing. Justin Trudeau has promised that if he comes back into office, he'll place a moratorium of 2 years on foreign purchases of Canadian property, foreign purchases being a big driver of property price increases in Canada.
Hey, Andy, sit tight. We'll come back. We're going to continue with Andy Brown, Bloomberg New Economy Editorial Director, because I want to ask him about Ed Yardeni, who made a comment on Bloomberg TV early talking about China not being investable. So I'm curious, as we broaden out and think about our audience, our Bloomberg audience, see what Andy has to say about that. In the meantime, I just want to give you a quick check on the markets. S&P 500 down 120 points, down 2.7%, 2.7% lower down on the Dow Jones Industrial Average, and we're looking at a 3.25% loss on the NASDAQ. All right, now let's get to world and national news, and Nancy Lyons, she's in D.C. Hey, Nance.
Hey, Carol, the Homeland Security Chief is getting an up-close look at the migrant surge at the southern border in Texas. Speaking in Del Rio, Alejandro Mayorkas says Customs and Border Patrol have processed over 6,000 migrants in the last few days, and he says they're returning many of them to their home countries, with the majority of them from Haiti.
We are working to increase the capacity of return flights to Haiti and other destinations. We anticipate at least 1 to 3 flights per day.
Mayorkas says if you come to the states illegally, you will be returned. Some foreign travel restrictions into the U.S. will soon be eased by the Biden administration. Officials say beginning in November, they'll allow foreign nationals into the country if they have proof of vaccination and a negative COVID-19 test. The new rules would allow families and others who've been separated by the travel restrictions for 18 months to plan for their long-awaited reunifications. UK Prime Minister Boris Johnson applauds the news.
I thank the president for the progress that we've been able to make. Yes, we have done it faster than we expected, but that's thanks to the hard work of our team.
Johnson says he believes the restrictions were lifted thanks to the high level of vaccination in the UK. Twitter says it will pay more than $809 million to settle a consolidated class action lawsuit, alleging the company misled investors about how much its user base was growing and how much users interacted with its platform. The company says the proposed settlement still needs the approval of a judge. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Ed Ludlow. He is in for Tim Stanovic. A headline crossing the Bloomberg, the SEC investigating Activision over workplace practices. This is a headline coming from Dow Jones, Wall Street Journal. So watching that one, Ed.
Yeah, it seems like it's a very similar story to what we saw with Epic, and this is an industry which is facing a lot of questions in that area.
Yeah, exactly. All right, so we'll continue to watch that. I want to do a quick check on what the share price is doing, although most names in the market, it's down about 5.25% as we speak, and I'm just looking to see, yeah, taking a leg down significantly on that headline, so now down about 5.5%. In the meantime, we're going to get back to Andy Brown of Bloomberg New Economy in just a moment, but just an update, we do know that the United States always monitoring global markets and stands prepared to respond appropriately if needed. This, Ed, coming from White House Press Secretary Jen Psaki in her daily White House briefing.
Yeah, and Psaki's saying that the Treasury Department, of course, would take the lead in doing it. What's fascinating about this story is it's not about what Chinese policymakers have said, it's about what they haven't said. And you have names from Goldman to Standard Chartered to Citi basically saying we need a signal from policymakers in China on how far they're willing to go with this at the expense of economic growth.
Yeah, exactly. And that's the bigger story. Whether or not we see some kind of contagion effect, does this result in slowdown in terms of Chinese growth? This is something we can get into with Andy in a moment. But the concern is, and we do know that there's some bond payment deadlines looming when it comes to Evergrande. There is concern about whether or not they can meet those obligations. It's $300 billion worth of liabilities. And of course, this is all on this regulatory crackdown that we're seeing from Beijing.
Yeah, I think Evergrande has $660 million of payments through the end of the year, 615 million of those dollar bonds. So a lot of focus on the market right now.
Yeah, exactly. But keep in mind that this is a market, certainly on the U.S. side of things, that has continually gone higher and higher. If you look at those major equity averages here so far in 2021, in some ways, some would say investors were just looking for reasons potentially to take some money off the table. We're going to continue with Andy Brown in just a moment.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Worst level of the day right now. 43 minutes to go ahead of the closing bell. Lots going on. Let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are plunging today amid the China Evergrande worries. Dow's currently down 968 points. S&P's drop 127. NASDAQ is lower by 513. The U.S. 10-year yield at 1.3%. Gold is up 8. Transport sink 292 points. And Bitcoin is down by 9%. Among the main 11 S&P sectors, all were in the red, led by declines in energy and the financials. Every stock in the Dow is in the red, led by 5% losses in Caterpillar. In other news, Jim Chano says he's short Wynn Resorts. Coinbase drops its plan to launch a crypto lending program. And Toast now sees its IPO pricing 34 to 36 per share. Wrapping things up, homebuilder Lennar reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. The SEC is investigating Activision over workplace practices. That, according to Dow Jones, Activision shares, they are down now by 5.8%. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, Activision sinking on that news. All right, Charlie, thank you so much. Stocks continuing to trade at their lows of the session. Let's get back to Andy Brown, still with us, Bloomberg New Economy Editorial Director. A must-read is his daily newsletter. He comes out with a weekend read every weekend. Obviously, it's called The Weekend. And you can sign up for the New Economy daily newsletter at Bloomberg.com/neweconomy. So check it out. Andy, in terms of the news flow from China, is this just going to kind of continue, where we're going to see more oversight, as you said, as he's, remaking the economy? We're going to continue to see this spread even into other sectors, or are we getting to the end of it, do you think?
We're at the beginning of it.
Okay.
I said earlier that Xi Jinping, the president, is trying to re-engineer Chinese society, and to do so, he's going to have to re-engineer the economy. And
is everybody on board with this in China?
Put it this way, you're not going to find anybody who's standing up
going to say no
against Xi Jinping's plan to promote common prosperity. No. Everybody in government, regulatory authorities is on board. And the sin, of course, is to underinterpret his instructions, not to overinterpret them. Hence, you're seeing this really fierce, vicious regulatory action against multiple industries. They've worked their way through digital platforms to fintech to edtech and now gambling.
You paint this beautiful image in your newsletter of private company CEOs in the blackjack, baccarat halls, the VIP rooms, rubbing shoulders with officials. That's where business gets done. So, what is the conversation between the private sector and Xi Jinping? Is it open, or is it simply one-way traffic?
Well, the conversation is hardly a dialogue of equals. These are solutions that are being imposed on whole swaths of the privately run economy. And essentially, you're there to learn your fate. And thinking about the gambling industry, what might happen to the casinos in Macau? Well, if they're lucky, maybe they meet the same fate as the video gaming operators. Those guys are now being throttled by regulation, including only allowing kids to play online games for 3 hours a week. If they're unlucky, they end up like the home tutoring companies, which are closed down altogether. There is no public consultation process in China overall.
No public commentary, right?
Exactly.
Well, what's interesting, too, is that I wonder, Andy, because as you say, if we look at a lot of the developed world, Europe is looking at the growth and dominance and control of big technology. We are, too, in the United States. And we're looking at the inequalities in our society. So we're looking at the same thing. obviously China does it differently, but I do wonder if ultimately, I mean, China is so important in terms of the global economy. Does it ultimately, longer term, create, again, an even more dynamic Chinese economy?
Well, that would certainly be Xi Jinping's goal here.
Right.
To get there, if indeed they can get there, there's going to be a huge amount of turbulence. Look at what's happening now in the real estate sector,
right,
where Chinese authorities seem ready now to countenance the collapse of their second largest real estate company, Evergrande, all in the name of trying to make housing more affordable for the masses, not a speculative asset for the rich. Well, if he's serious about that, he's going after a sector of the economy that counts for between 25% and a third of GDP.
It's a lot.
It's a lot. A sector in which Chinese people have invested 40% of their assets. 90% home ownership ratio in China, one of the highest ratios in the world. If you had money, if you make money in China, you don't put it in the stock market, which is pretty much a casino in itself. You put it in real estate. And I think what people are underestimating here is the potential impact on consumer behavior. If Evergrande, this real estate giant, goes down, and if people perceive that the government really is ready to let real estate prices sink, what that does to consumer behavior. And
right, the wealth impact, right?
The wealth impact, and don't forget that consumption in China is a very low percentage of GDP, low in China even compared to Chinese economic peers.
Do you want to squeeze the last one real quick?
Yeah, very quickly, Andy. In 2 words, if they're going to clamp down on such an engine for growth, where does the growth come from in China in the future?
Just got about 25 seconds, Andy.
Okay, so I think the answer is very simple. They have to calculate that there's going to be a much lower Chinese growth rate, and it's going to be a more realistic growth, because so much of the growth now, China is on steroids, and that growth has been fake growth, and a lot of it is pumped up real estate prices, and we're seeing the result of that now in the Evergrande debacle.
So a real new growth equation going forward for China. Thank you so much. Thank you for sticking around, really giving us a deep dive into what's going on in China, which is, as we know, so much impacting the markets today. Andy Brown, thank you so much. He's our Bloomberg New Economy editorial director, as we mentioned. Check out his Newsweek and his newsletter that comes out at bloomberg.com/New Economy. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Massar along with Ed Ludlow. We're going to get back to the market trade in just a moment. We're also going to get to Dave's chart of the day. Ed, have you ever guessed the song? Ed Ludlow? No? You should.
Oh, I will guess the song. Well, I always get it wrong, so I'm not going to embarrass myself live on television doing that.
Oh, come on. Humbling is good for all of us. All right, we're going to get to Dave Wilson in just a moment. Tracking, though, the trade. I do see stocks just coming off their lows, Charlie. They're trying to rally here.
Indeed, looking for a song with bouncing off the bottom, because here's what's going on. We have got the Dow, the S&P, and NASDAQ all on the minus side right now. 103-point drop in the S&P, down 2.4%. The global stock rout sparked by investor angst over China's real estate sector and Federal Reserve tapering deepened today. Stocks falling the most in almost a year. S&P falling by about 2.7%, biggest one-day slide since October of 2020. A test for the buy the dip mentality as the gauge jabs at its 100-day moving average. Right to the numbers. S&P down 101 now, down by about 2.3%. Dow Industrials down 776, down 2.3%. NASDAQ down 429, a drop right now of 2.9%. We've got the 10-year yield 1.30%. Gold up 0.4%. Spot gold 17.61 the ounce, while West Texas Intermediate crude down 1.9%, 70.59 a barrel. S&P 500 one more time, worth repeating, down 100 points, down 2.3%. Pfizer and partner BioNTech say their COVID-19 vaccine is safe and produce strong antibody responses in children between the ages of 5 and 11 in a large-scale trial. Amber D'Souza is a professor of epidemiology at the Johns Hopkins University Bloomberg School of Public Health.
So these trials are considered different doses. Sometimes with children, they need the same dose as adults, and sometimes a smaller dose is the right dosing. So this data that's been released today looks like it's for a smaller dose, and it's shown to boost antibody responses and not have high side effects. So we'll have to wait and see what the other dosing schedule suggests, but I'm sure that information will be submitted for consideration.
And Dr. D'Souza with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares, they're up right now by 0.2%. Its German partner BioNTech, its ADRs down 6.1%. AstraZeneca rallying 4.7%. Moderna down 1.5%. J&J Johnson & Johnson down 1.1%. Recapping steep losses for the U.S. stock market, with the S&P down 100, down 2.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, you are up to speed on the markets. Charlie Pellet, thank you so much. You are listening to Bloomberg Business Week. Carol Massar, Ed Ludlow, and this is Bloomberg Radio.
Some come out with sympathy, some come out with support, some blame the management, some the employees. Everybody knows it's the industry,
Wow, I wasn't sure, knowing Dave's chart, whether or not you could find a song with the words industrial disease in it. Is that the name of the song?
Indeed it is.
But I have no idea. Ed Ludlow, do you know the band?
That's flown right over my head. No idea.
Before I Google, let's see if Ed can give us, if Dave can give us one more clue. 90s? 80s?
80s.
Well, I'm at a disadvantage.
Is that
then.
British.
It's not Talking Heads, is it?
No.
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 I don't know.
Very distinctive vocal there, but guy who's singing is better known for his guitar playing.
For his guitar.
Did a number of movie soundtracks, actually.
All right, I'm not going to cheat, so help me out here.
You're in dire straits.
But I'm bummed. Well done, Dave Wilson. Dire straits, industrial disease. And industrial disease is indeed the title of your chart. So what are we talking about?
Right. I mean, sometimes songs occur to me where I'm writing headlines. That's sort of how it works. In any case, this particular chart looks at industrial stocks, and it's something that Jonathan Krinsky over at Baycrest Partners was doing at the end of last week, and figuring that the shares were vulnerable. And they have been now for a few months. It's been quite the reversal for the S&P 500 Industrials Index relative to the U.S. equity benchmark. You go back to May of last year. That's actually when that particular group set its low relative to the S&P 500. And then you look ahead, up about 21% in the course of a year or so. But since then, you're talking the last 4 months, it's given back more than half the gain. Now, that's kind of consistent with the idea that, you know, some of the more economically sensitive shares have not fared so well lately. You want to say value as well, you know, relatively cheap stocks. But when you look at the industrials index, there's nothing cheap about it these days. 37 times earnings, you're looking back historically, 26 times projected profit, forward earnings.
Gets a little heady, right?
Yeah,
if you look at what's going on in the economy going forward, and some are even saying, we talked about this earlier, that, you know, maybe we don't see any economic growth in some quarters later next year.
Yeah, which raises a question of whether what you've seen lately gets worse. Now, if you look at today, I mean, it's clearly kind of a different story in a sense because, you know, as much as industrial stocks are down, they're not down as much as the S&P 500 is. That group only off 1.5%, while the index is down 2.2% at the moment. In any case, if you want to see this chart for yourself, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So Ed Ludlow, when in doubt, you can Google really quickly and often find the songs, which I have done. I don't call it cheating. I just call it using my resources.
Don't want to show my age as the issue, but nestled within that industrials group is airlines, of course, which are higher today, and maybe they'll have a better fortune now that travel is starting to open up between borders. Change the subject very quick.
One of my gainers, actually. We'll talk about it later. All right, stock of the day, Dave Wilson, what do you got?
Another gainer. Mirati Therapeutics, the ticker is MRTX. There are a couple of pieces of news today. The first is that a treatment they're working on for non-small cell lung cancer had positive results in a mid-stage study, so they were well received. And beyond that, the company named a new CEO. It's a gentleman named David Meek. He previously ran a French drug maker, Ipsen, among other companies, and he's taking over for Mirati's founder, Charles Baum, who's still going to be around as the head of research and development and also as president. It'll be interesting to see how that relationship pans out. In any case, Mirati shares, I mean, they're kind of struggling to hang on to gains at this point. They were up more than 10% earlier in the day. Now you're only talking 2.7%. Nonetheless, the shares are higher on what is very much a down day for stocks.
It's funny, when I was looking for gainers today to talk about Beyond the Bell when we do our simulcast, biotechs are what came up because there's going to be some rulings by the FDA tomorrow, and so there's some stocks moving in anticipation of that. All right, Dave Wilson, thank you so much. Appreciate that. Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Now, off to D.C. and Nancy Lyons for World and National News. Hey, Nance.
Thanks, Carol. There is outrage over video and pictures of Haitian migrants being whipped by U.S. Border Patrol mounted on horses in a Texas border city. White House Press Secretary Jen Psaki says the administration is looking into what prompted it.
We just saw this footage. It's horrible to watch. I just have to get more information on it.
Psaki says she does not believe anyone seeing the footage would think it was acceptable or appropriate. Today, Homeland Security Secretary Alejandro Mayorkas was visiting the Del Rio International Bridge, where as many as 10,000 illegal immigrants are huddled under the structure. He says 1 to 3 flights a day are planned to take many of them back to their home countries. Many are from Haiti. Big news from Pfizer and partner BioNTech, which says their COVID-19 vaccine is safe and effective for children as young as 5 years old.
The trial group included nearly 2,300 kindergarten and elementary-aged children ages 5 to 11 years old. The kids got just a third of the adult-sized dose. Researchers say that was enough to produce antibodies comparable to teens and young adults with similar side effects. Pfizer plans to submit the data as part of a near-term request for an emergency use authorization from the FDA to get more children vaccinated. The findings could pave the way to begin vaccinating children within months. In Washington, I'm Amy Morris, Bloomberg Radio.
COVID-19 has now killed about as many Americans as the 1918 Spanish flu pandemic did, approximately 675,000. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. And just looking at stocks, just want to update you on the trade since it's been a down one today. We're coming off our lows again, down still 2.2% on both the S&P and the Dow Jones Industrial Average, still a decline above about 2.7% on the NASDAQ. Ed, I'm going to be watching very closely to see if we have any buying into the close because stocks are certainly cheaper than they were.
It's very hard to find a gainer today. Very few options out there. This is a broad-based sell-off and the dip buyers have not come in yet.
Yeah, exactly. Coinbase, let's talk about it because Coinbase is down about 3.9% today, bowing to pressure from U.S. regulators and tabling plans to launch a product that would have paid users interest for lending out their tokens.
Yeah, so lend would have been important for Coinbase, right? Because it's trying to diversify. It just makes money from trading fees. And so the proposal here was to have users lend their coins and in return get around 4% interest, which sounds good. But, the SEC's moved so quick to kind of shut this down. And it seems as if, the next question is how much appetite does Coinbase have to push back?
Yeah, exactly. Well, and they're a new kid in town when it comes to regulators, right? And the SEC and Gary Gensler, they are increasingly taking a tougher line on cryptocurrency products. We talk about this a lot, right, on air, is that this is still kind of the wild, wild west to some extent. And in terms of what will come for regulatory oversight, we're waiting to see ultimately what happens. But it is certainly has gone from a story, 10 years ago that we kind of giggled at, laughed at, kind of brushed it off to increasingly you're seeing the traditional financial sector looking at it.
Yeah, and when I say appetite, it's kind of pushed back. We know that Coinbase has been hiring in the legal department, hiring experienced litigators and those with experience with regulators to kind of prepare themselves for when there is a real fight about how they operate their business.
Yeah, and listen, back in, April, we saw the valuation of Coinbase go to as much as about $89 billion when it went public through that direct listing on the NASDAQ. So nonetheless, we watch it, but it was interesting. And that news kind of quietly coming in on Friday under the radar, it felt like. All right, you are listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Steep losses for U.S. stocks. The global stock rout sparked by investor concern over China's real estate sector and Federal Reserve tapering deepened today. Stocks falling the most in almost a year. Yes, we are off session lows, but still a down day with the S&P down 87 now, a drop there of 2%. We've got the Dow down 704 points, down 2%. NASDAQ down 386, lower by 2.6%. 10-year yield 1.31%. Bitcoin extremely hard hit today, plunging 8.4%, taking a lot of Bitcoin-related stocks with it, including shares of Galaxy Digital Holdings down 14.4%, Riot Blockchain lower now by 7%, and Marathon Digital Holdings is plunging by 6.2%. 10-year up 15.30 seconds, 10-year yield 1.30%, gold up 5/10, 17.63 the ounce, and West Texas Intermediate crude down 1.7%, 70.73 a barrel. So again, recapping the stock rout deepening to the worst in almost a year, S&P down now by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. In the last days of the Trump administration, a top-ranking general was so worried the president could start a nuclear war on a whim, he secretly acted to constrain him. That news, revealed in a new book, highlights a long-standing danger. In the U.S., there are no formal guardrails to prevent an unstable president from launching nuclear weapons. Under current policy, the commander-in-chief possesses sole authority to order an attack at any time and place. Such unrestricted power poses unacceptable risks. Stronger safeguards are needed to limit the danger. At a minimum, a presidential order for a preemptive nuclear strike should be certified as authentic by the Secretary of Defense and reviewed by the Attorney General. Adopting a better process for nuclear decision-making would protect the country and the world from the consequences of a presidential miscalculation. This editorial was written by the Bloomberg editorial board. I'm David Shipley. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, everyone. We are driving to the close. Just got about 9 minutes left in today's trading session. Bouncing off our lows, as you just heard from Charlie Pellet, but nonetheless, still down almost 2% on the S&P and down. NASDAQ, still a decline of about 2.5%. Let's get to it with Michael Sheldon, Executive Director and Chief Investment Officer at Hightower RDM Financial Group, joining us once again on the phone from Westport, Connecticut, here with Ed Ludlow and myself. Michael, good to have you here. September, historically, hi. We know it's not a great month for stocks. How do you see the trade today? Is it China? Is it worried about what the Fed might do next? Is it worries about earnings growth, economic slowdown? Is it worry about higher taxes, or is it kind of all of it?
Well, today was certainly a challenging day for the markets, but I think you also need to keep things in context. Heading into September, for example, the S&P 500 had advanced 7 months in a row, and we had also gone almost a year without a 5% pullback in the S&P 500, which historically is one of the longer periods in history. So then you also have a number of these concerns, which you just pointed to, which sort of indicates the market's been climbing a wall of worry. You have COVID, fears about inflation and taxes and tapering, and add that over the past day or two to events in China and also the debt ceiling. So there's any number of factors that really contributed and weighed on the markets. And sometimes it's hard to pinpoint the exact reason the markets start to decline, but I think we've started to see a pullback. September, October also, as you pointed out, historically is one of the weaker times of the month. So I wouldn't be surprised to see a little additional weakness. To us, it seems that, we're constructive in terms of our intermediate term outlook, but obviously there are some issues. Supply-demand imbalances in the economy, for example, for things like semiconductors and autos and the demand for labor. There's a need for more than 10 million jobs right now to be filled by companies. That's going to take a while to get worked out. And so we're keeping an eye on things. So we could be a little choppy for a while, but ultimately we see growth picking up again somewhat as we get into the next several months.
Well, two words we haven't really talked about today, Carol, is Delta variant. You know, we've had so much discussion around China and inflation, the Fed, but you seem, Michael, pretty positive, I guess, on economic growth, but with Delta variant still being a big question mark.
Well, I think it's important to sort of think about things. If you look at past cycles, for example, economic cycles typically last a number of years as opposed to a number of months. So, it is true that this year will likely represent peak year-over-year growth in terms of GDP and corporate profits, but it's probably not the peak in terms of the overall economy. And also, if you look back at past cycles in the second year of bull markets, for example, historically, returns have been positive, but they've been more muted, more moderate. And I think as a part of the rewards of investing in equities over time, we look back, and since 1980, for example, there's been an intra-year drawdown in the market, the S&P 500, of about 14%, but equity markets have still finished positive about 75% of the time.
But you still think we should be standing by for a pullback or indeed a correction?
Yeah, we've been thinking about this and talking about this internally for quite a while. As you pointed out earlier, there are any number of concerns right now, from tapering to taxes to COVID, and all of this is starting to sort of weigh on investors. But ultimately, we think COVID is probably one of the biggest concerns, and it looks to us like COVID is probably peaking in terms of the year-over-year rate, the second derivative in the United States. And if that's true, that will help to increase confidence, which has also started to come down recently. And that should provide a boost to the economy as we get into next year and lead to more optimistic outlooks.
What's been fascinating too, Michael, to watch, and I've been watching this so closely today as we've gotten on air since about 2 p.m. Wall Street time, that as we continue to see stocks take another leg down, all of a sudden you see kind of a kick off that low, and then maybe it goes a little bit lower, but then again, buyers come in. This is something we have seen continuously in 2021, is investors coming in to buy the bottom, especially as we've seen those major equity averages hit that 50-day moving average to the downside.
Well, that's exactly right. I think there have been 9 times over the past year when the S&P 500 has been flirting with the 50-day moving average, and each time it's tested that level, buyers have come in. So we'll see what happens. Obviously, we're bouncing off the bottom here, so we'll see how things close today. And as of right now,
is that a key thing in terms of how we close today that tells you really what's going on in investors' heads?
Yeah, I think so. If the markets close close to the 50-day moving average and off the bottom, then I think that also reinforces the psychology that investors may start to come in. But we still do have a number of sort of headwinds or cross currents that could lead to choppy trading over the near term.
Where's the opportunity?
Well, I think for the market, the important thing is that we don't think this is the end. This volatility we're starting to see is the end of the economic expansion. And over the past several months, we've seen a more rotational market where growth, one week we've had growth leading, one week we've had value. So I think going forward, if you think of it in the context that we're probably going to be in the mid-cycle for quite some time, we've probably gone from early cycle to mid-cycle. I think in terms of your portfolio, the way we think about it is you want to be sort of more broad-based between growth and value. I think value may certainly do better as people think about growth in 2022, but I think the days of growth dramatically outperforming are probably behind us. So I think you want to have some exposure to both growth and value, and you want to also have some small as well in your portfolio.
Yeah, really interesting to say that. And the mid-cycle, just got about 30 seconds left here, Michael. They could last for a while, right? The mid-cycle part of this market cycle?
Well, that's exactly true. Economic cycles, again, tend to last a number of years as opposed to just a number of months or quarters. So we're likely to see higher GDP growth and profit growth next year. I think the estimates for next year are about 9 to 10% EPS growth and 4% GDP growth. obviously that could change depending on what happens in Washington.
All right, got to run. Good analysis as always. Michael Sheldon, he is Executive Director and Chief Investment Officer at Hightower RDM Financial Group, on the phone from Westport, Connecticut. And as we've been saying, we do see, Ed, stocks coming off their lows of this session. We're still down about 75 points on the S&P 500, down 1.7%. Dow Jones Industrial Average, a decline of 602 points, down 1.7%. NASDAQ, a decline of 2.2%, off 330 points, so taking the biggest hit on a percentage basis. But nonetheless, certainly we're seeing some buying into the close. This will be interesting to see where we end up with just about 3 minutes left in the trading day. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and on YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast team. Carol Massar, joined today by Ed Ludlow, M for Tim Stanovic, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, this was, I guess, maybe potentially the big pullback that a lot of folks are looking for, though, seeing a little bit of dip buying coming in as we get closer to that bell.
This is what's been fascinating to me, Romaine. I just keep watching that as stocks take a leg down, all of a sudden you see those major equity averages come up again. And yes, significantly so. The S&P down 2.9% at its lows. Now we're looking at a decline of about 1.6%. Michael Sheldon of Hightower RDM just telling Ed Ludlow and me that we haven't had a 5% pullback in some time. So it's understandable, Ed, that we might see some pullback, but he's still pretty constructive on the markets.
Yeah, he was talking about opportunity, you know, that cycles don't come in quarters, they come in years, and there's a lot of growth still to come in certain sectors.
I mean, phenomenal amount of action in terms of volume coming back to the market. When you're just looking at your average volume versus the last 20 days, we're up 40%, 41% on the S&P 500, more than 50% on the Dow. So real action taking place at the moment in the markets.
And we've heard a lot of strategists coming into this saying that look at the credit markets, and there were no glimpses of big FOMO, that of course spreads are historically tight, but a lot of this has been supported by fundamentals, by the health of corporate balance sheets. So Romaine, when you think about what the equity market and going cross asset, you haven't seen a huge blowout in spreads despite the headline full faith and credit declining 5 basis points on the day.
It'll be interesting to see what the market reaction is over the next couple of days, of course, both in terms of whether folks are willing to come in and buy this dip tomorrow, but also you have the Fed meeting on Wednesday and how that might change the narrative. Remember, at one point on the day here on the S&P 500, we had basically almost every stock in the index down. There were only 3 stocks that were actually higher, and it looks like we're going to end the day with about 50 of those stocks higher here. That may not sound like much, but that's certainly a huge improvement from where we were a little bit earlier here. Right now, you're looking at the Dow Jones Industrial Average. Looks like it's going to close the day down by about 614 points, about 1.8%. The S&P 500 right now down about 75 points, or about 1.7%. We should point out at one point it was down about 2.7%, and from that September 2nd high, that almost amounted to a 5% drawdown. It was basically about 4.9%, so just shy of that 5% drawdown that we haven't seen since November of last year. The NASDAQ Composite down about 2% on the day, 330 points, and the Russell 2000, Carol, down 2.4%, 2182.
So crucial, and you know the technicians, Romaine, are going to be weighing in on this big time, is we have seen so much buying come into the market over the past year, particularly as we saw major equity averages hit those 50-day moving averages on the downside. So again, going back to Michael Sheldon, the conversation, he said if we pretty much close at that 50-day and kind of hold, that'll be a very significant sign, Taylor, in terms of how investors feel about the equity market.
You know, Carol, we often laugh at you when you put some of your decliners in your gainers board, and now is your chance, because it is red across the screen for me on the sector winners and the sector losers. It is all red, even in the winners category. So let me just walk you through the relative outperformers, though you're still off 0.2 to 0.5%. For a radio audience, it's utilities and real estate. So when bond yields are falling, these typically do better. So that's really what you're seeing on a relative basis, though it is still very much in the red. Let's migrate down to the bottom, because this is where things get really interesting. A lot of this is media and technology. You're off 2.5%. Typically, that's been really defensive categories in this pandemic, but you go down and you see banks, energy, auto, semiconductors. Those are off anywhere from 3 to 4%, as you're seeing some unwind, at least today, in that cyclical refi inflationary trade as well.
All right, be kind to me because unfortunately, a name that was in the green big time, Insight. I know. I keep refreshing my Bloomberg, hoping it's going to go back into the green. Insight was up. In general, like a lot of the biotech names were, we saw some gains in that sector. There were some FDA decisions that are coming tomorrow, so we did see some play there. Insight, though, was up 4.6%. Forgive me, down about 0.1% here at the close. But do look for FDA news tomorrow on one of their topical treatments for dermatitis, so we'll look for some movement there. Seagen, another biotech company, top in the NASDAQ 100, up 1.8%. That was a gainer. They presented some interim data for one of their treatments for metastatic cervical cancer. Some optimism there. And I just got to mention American Airlines up 3% in today's session. White House announcing easing restrictions for travelers from the UK and EU. I know you got some news there.
Yeah, I'm just going to jump in here. Sorry about that, Carol.
No, that's okay.
Shell apparently nearing a deal to sell assets to ConocoPhillips for about $9.5 billion. This is based on reporting from Dow Jones here. These are assets down in the Permian Basin here. We'll dig a little bit deeper into it to figure out exactly what they're selling and why. But again, this looks like about a $9.5 billion deal. A big deal for Shell, but probably even bigger here for ConocoPhillips. Ed?
Yeah, I'm looking at the decliners. Coinbase down by the most in a few weeks. Lowest since August 3rd, though, and this drop comes as we see cryptocurrencies, including Bitcoin and Ether, lower. But also, it's dropped its own plan for a lending platform where users would get 4% interest if they lend their coins. The SEC has nixed that pretty promptly. Also seeing Chinese ADRs lower. No surprise, given all the narrative out in the market about contagion. But Pinduoduo, the Chinese e-commerce platform, been a particular victim of some of the sell-off we've seen around those concerns in recent weeks. And lastly, Invesco down pretty significantly, almost 10%. Of course, we got that report on Friday from the Dow Jones that is in talks with one of State Street's asset management units for a merger, according to unidentified sources. So another stock to watch going forward.
Yeah, some great ones to be focusing in on, Ed. I'm looking at what you should look at across asset right now. Let's go into the FX moves, because this is a search for safety, my friends. Apparently, look, traders were saying that volume wasn't massive. This wasn't like a sudden run for the hills, but you did see the yen up 0.5%. You did see the Swiss franc up 0.5%. You did see Australia dollar index as well, up 0.1%. So this is looking at strength, of course, of the US dollar ahead of the Federal Reserve. Remember, we've got something like 6 key central banks giving their monetary policy outlooks for this week alone. So plenty of nervousness in the market, particularly when it comes to foreign currencies. The pound down 0.6%, Canadian dollar lower as well. Why is the Canadian dollar lower? Why is the loonie lower? Because of what's happening in commodities. And we did see the sell-off across Bloomberg Commodity Index. Crude off by 1.5% as we question growth, as we worry about China, as we see natural gas, interestingly, down in the United States. But if I had my closed markets up here, you would see phenomenal moves in gas in Europe and the UK, up 15, 16% on the day as that energy crunch, that crisis continues. Let's look at where there is also a flight to safety. It is in the haven of bonds. Yields lower across Europe. What about in the US, Taylor?
You're certainly seeing bonds catching a bid in full faith and credit, Caroline. Yields are falling really across the curve, 3, 4, 5 basis points. But earlier, this was trending more towards 5 to 6. So if we're going to nitpick, you could say maybe you're off the deep lows of the session when you talk about yield. But overall, it really was sort of a risk-off, bonds catching a bid kind of day. Excuse me. There are some other key technical levels, of course, Carol, when we talk about the 10-year yields, but you fold those into the S&P as well. And really, the classic range bound that we've been in the past few months, though on days like today, it catches your attention when it goes all back to the flight to quality.
Well, I do feel like this is a time where technicians are dusting off their charts, looking at some of their analysis and trying to decide, okay, wait a minute, are we developing a new trend line here? What does it ultimately mean? But I do think many will say it was significant to see some buying into the close here, certainly in the U.S. market. I'm going to be curious about the China open and Asia market open in just an hour or so here, Romaine. But I do wonder, you know, this is what happens longer term. The Fed meeting is going to be crucial. Maybe tomorrow we have a little bit of a wait and see mode as that 2-day meeting kicks off.
Yeah, and I think that's probably going to be even a bigger factor here. I mean, there's obviously going to be some short-term opportunities who might come in and buy this dip. But if you're a longer-term investor and you're looking for an entry point, you probably want to wait to see what comes comes out of that Fed meeting, what they signal with regards to that taper and how that might sort of fold into your general outlook.
Interesting views from different sides of the street, though, today, because we have Mike Wilson and Morgan Stanley, like, sort of taking the glass half empty kind of viewpoint. Look, we could be sitting...
fire and rain, right?
Fire and ice, wasn't it? 20% you could see on the
different.
downside. We love a little bit of grandiose statements coming over from certain pockets of Wall Street.
Who sang that song?
Fire
and Ice.
Fire and Rain, Romaine. James Taylor.
James Taylor.
Quickly Google.
Caroline can
But on the upside, and we're going to talk sunshine and rainbows right now, because JP Morgan had, of course, they were earlier calling it was a read spike on the Bloomberg a little earlier, saying, look, the stock rout is overdone, dip buy. So we have got two very different viewpoints.
Did they use the phrase sunshine and rainbows?
They didn't, sadly. I wish they had. That would have been some nice, like, you know.
Come on, Ed. Are they doing that out on the West Coast? Sunshine and rainbows?
Guys, there is no sunshine in San Francisco, as Caroline well knows. It's cloudy most of the time. And you know what else is cloudy? The fiscal policy outlook. Because this isn't just about the Fed tapering. It's about the pullback from the US government and the stimulus they brought in temporarily. And how far are China going to go clamping down on a real estate industry that was the driver for growth in the first place? That's what we've been asking guests all day long.
And you wonder how much of this is the tax policy and some of the debt ceiling crisis that you've been alluded to. And the markets really, up until this point, Carol, had been shrugging it off. And you do wonder if taxes and some of this is now coming back to the forefront.
No, it's a really good point. Rich Miller on the Bloomberg, check out his story too, talking about what Ed mentioned, that all of the federal government programs that pumped so much money into this economy, that's the other tapering that he's kind of concerned about, and people are watching, Romaine.
Absolutely, but I mean, it's still, I think you have to sort of pull this back towards what's happening globally here. I mean, obviously, it's not just about China, but I think when you see the reverberations going through the commodity space, when you see the flight to some of those haven currencies, and of course, when you see the reaction in bonds, it's still, at this point, people are still willing to re-embrace U.S. Treasuries here when things get skittish. I think it says a lot here about investor sentiment. We can't sort of forget, too, that the VIX had quite a wild ride today, actually, right now, around 25 and change.
And it's only Monday, guys. We got lots more to come this week.
And it's UN week. Do you think they'll address this?
I don't know. Well, we will certainly talk about it if they do. All right, guys, that's going to do it for the Monday edition of Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We will catch you tomorrow, same time, same place. So much going on.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, along with Ed Ludlow, will continue market coverage in just a moment. First up, though, a look at world and national news with our own Nancy Lyons. Hey, Nance.
Hey, Carol. An investigation will be conducted into that drone strike that killed Afghan civilians last month. U.S. Central Command thought the target was an ISIS-K operative carrying explosives, but instead it was an aid worker carrying water. Pentagon spokesman John Kirby explains what their focus will be in the probe.
To study the degree to which any policies, procedures, or targeting mechanisms may need to be altered going forward, if any. And, of course, to then take a look at what levels of accountability might be appropriate.
Kirby says U.S. forces recently killed a senior al-Qaeda leader in Syria. They do not have any indication civilians were injured in that attack. Pfizer says its COVID-19 vaccine works well for children ages 5 to 11, and the company says it will seek emergency authorization for the vaccine to be given to that age group as quickly as possible. But Dr. Gregory Poland, director of the Mayo Clinic's Vaccine Research Group, says there are still some questions he wants answered.
We know we can protect children with a vaccine, but what will be the distribution of side effects that occur, and what will that balance between risk and benefit look like?
Poland tells Bloomberg he wants to see data about the side effects of the Pfizer vaccine in young boys and whether it causes any heart conditions that have been detected in some older men who've received the shot. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week on this Monday. Carol Masser along with Ed Ludlow out there on our West Coast Bureau. And there is a story by our Cecile Gutcher and Elena Popina on the Bloomberg Terminal. And it's talking about Wall Street traders, basically the positions that they were taking ahead of some of the trading that we're seeing today, basically hedged up for a lot of volatility like we're seeing it.
Yeah, and loaded up on protected puts well before Evergrande hit the Bloomberg, right? Ever before Evergrande, you know what I'm trying to say, before the story came to light. You know, I think, you know, we just joked about it on TV a little bit, but there are clouds, and there have been clouds in financial markets for a bit of time. And the question is, if you're, you know, playing the game, where do you make the opportunity and where do you protect yourself?
Well, and you know, what's interesting too, and I think the conversation I thought we had with Michael Sheldon of Hightower RDM was very constructive in that, first of all, every conversation we have, we are reminded that we are still in a pandemic. We're not out of it. We thought we would be in a very different position. I think it's safe to say if you had surveyed people at the beginning of this year, especially with the vaccine rollout, that you would have said we would be in a much different position today where we are. We are still worried about it and watching spikes.
Yeah, and the problem that all of those traders have had, as mentioned in the story, is that over that time, stocks have gone up and up and up and up and up, and the end's not been in sight until now.
Yeah, exactly. And we know this. We watch market cycles. Stocks do not just go up in one direction, nor do they ever, go down in one direction. There are cycles. And we've had quite a bounce back from certainly the fall off that we saw last year because of the shutdown of the economy, the health pandemic. And so we understood a lot of the bounce back and the, how quickly it seemed to bounce back when things started to clear up. But nonetheless, I'm not surprised to see that traders were getting ready for some more volatility.
Yeah, very quickly, when I was on the desk back in the day in London, they always would say, look at the haven assets. And along with these hedges or these puts, you also see investors moving into those haven assets for some form of protection while they go through the ride.
Gold, by the way, up 0.8% in today's trade. All right, you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Biggest drop to the U.S. stock market in about 4 months. Do want to begin, though, with a couple of developing stories, headlines from the Bloomberg Professional Service. We've got FedEx saying rates will increase by an average of 5.9% for U.S. domestic shipments. FedEx shares after hours up now by about 0.5%. FedEx, of course, will be reporting tomorrow, but FedEx saying rates in the U.S. going up by an average of 5.9%. ConocoPhillips close to agreeing to acquire Royal Dutch Shell's Permian Basin assets for about $9.5 billion. This from Dow Jones, citing people familiar with the matter. Conoco shares after hours down now by 3.6%. What a day on Wall Street. Biggest drop in about 4 months, but we did see stocks pair losses at the close. Dip buyers emerged. At one point, the Dow was down 971, down 2.8%. End of the session with a loss of 614, down 1.8%. S&P, which had been down 127 points, end of the day with a loss of 75, down 1.7%. Nasdaq down 330 at the close, down 2.2%. 10-year yield 1.30%. Spot gold up 0.6%, up $11 the ounce to $17.65. West Texas Intermediate crude down 1.8%, $70.07 a barrel. So again, stocks down the most in about 4 months amid a global rout sparked by investor angst over China's real estate sector and Federal Reserve tapering. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Really appreciate that update. Well, we talked about this story on Friday. It was one of the most read on the terminal on Friday. It was about the finfluencers that are making more than some bankers on Wall Street. Among them, Austin Hankwitz. He's a 25-year-old TikToker from Tennessee. And my co-host today, Bloomberg's Ed Ludlow, actually recently caught up with him. Check it out.
I never try and make any outlandish claims, and I guess that's sort of a misconception that, you know, there's both good content creators and maybe bad content creators on TikToks. The bad are the ones really pushing the penny stocks and you'll get rich quick schemes, right? The approach I take is completely different. I think people really relate to just how digestible and very approachable sort of fashion that I make my content, and not to, I guess, promise anything in the short term or even in the long term, right? Being very responsible with how we deliver this.
Financial advice from Austin Hankwitz. For more on what Austin and others are doing and why Old Wall Street is increasingly working with these finfluencers, let's get more on this story that continues to be among the most read over the past week on the Bloomberg. Joining us now is Missy Orlena Igafopoulou. She is personal finance reporter at Bloomberg News. She is here in our Interactive Brokers studio. Missy, it's a great story. Everybody's been reading it. You two talked with Austin for your story. What is it? Who are these finfluencers?
I think it's really fascinating if you try to look behind the scenes of why people like Austin even exist, right? I mean, over the past year, we've just seen a massive boom in retail trading.
Right.
And I think that's created a massive appetite for people to find personal finance content online. And that's really paved the way for people like Austin to create accounts to help people navigate, you know, what wild swings in the stock market mean.
Like today.
Like today. Or, you know, how to get in on a new cryptocurrency. Should you not? I think people really are looking for that kind of content. And people like Austin really took advantage of that sort of trend and were able to amass massive followings on platforms like TikTok. You know, and it wasn't long before financial institutions really wanted to become a part of this conversation. And so now they're reaching out to people like Austin and offering them a lot of money to place their products in their videos, and, you know, to raise their brand awareness.
Well, let's dig into that. Where are this new generation of investor influenced by the likes of Austin going to? Are they using apps? Are they going to traditional wealth managers? You know, what is the end goal here, or the end user experience?
You know, I think what's really interesting about the way these influencers deliver content isn't necessarily, you know, what is the next app I should be using. I think what they really want is to demystify Wall Street and to better understand these financial tools that for so long have been inaccessible to these people, you know, really figuring out whether to open up a Roth IRA and how to deal with your retirement and what's the best way to deal with debt and all these really basic personal finance questions that I think really confuse people.
Right.
Which is one thing. And then it's also the stock market, right? Like, how do I get in? Is the way into it going through, the day trading route, or should I look at something more long term? And I think people really struggle to decide what to do. And this content really just provides them some ground to figure it out.
Well, speaking of struggling, Missy, it also feels like traditional old-time Wall Street are also struggling with, okay, wait a minute, we got to make sure we have our consumer, our customer of the future. And a lot of younger individuals who grow up with parents who lost their job during the financial crisis and point fingers at the big banks and saying, well, wait a minute, I don't trust these guys. I want a new way of doing it. I mean, this is why they're looking for alternatives, right?
Definitely. I mean, if you look at statistics out there, you'll see that a lot of Gen Zers and millennials are really just disappointed with their banks.
Right, no doubt about it.
No doubt about it. But I think, again, what's interesting here is that when it came to banks really trying to reach out to that demographic, they never really did it in a way that demographic felt was accessible. And I think this is the difference, right? If you have someone like Betterment, which is a company that sponsors, Austin, they're reaching their customers through TikTok. I mean, that is where all these people are spending time. And Betterment, is really starting to realize that if they want to have access to that entire new generation of people that are going to be managing their money in the stock market, they better go to where these people are spending the most time. And that is on their phones and on platforms like TikTok.
Yeah, I asked Austin when he was on the show, what qualifies you to give advice around these things, right? And he gave a really smart answer that I'd encourage listeners to look at on YouTube. But tell us a bit about Austin. Tell us about his size and scope, his following, how he kind of goes about this interaction with users.
What's interesting about Austin is that, the story sort of leads with this anecdote of him really just being a customer of Betterment himself, and then one random day making a video about how, if you invest a certain amount of money in a retirement fund every month, you might retire a millionaire by the time you're 60, right? And he was saying that he was doing it through Betterment. And here was Betterment at their headquarters in New York City, all of a sudden this random day seeing an uptick in signups, and they really couldn't tell where it was coming from. And ultimately, they realized it was coming from Austin. And so I think, what Austin is doing here is really trying to understand what the needs are of these young consumers, right? And I know that there's obviously been a massive sort of surge of the Robinhood traders, the day traders, but I think at the end of the day, people are looking for some advice about how to make good long-term decisions, and Austin has really tapped into that.
It's how startups start, right? People feel like, wait a minute, this didn't work so well. Let me figure out a better way to do it. It's a must-read, and it is a most-read on the Bloomberg. Missy Igafopoulou, she's personal finance reporter at Bloomberg News.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. I'm Carol Massar along with Ed Ludlow. He's in for Tim Stanovic. And so, Ed, last 30 minutes, couple of guests coming up. We're going to talk a little bit more about the markets with our own Vince Signorella. And then coming up a little bit later on, we are going to talk with the chief scientist over at the Nature Conservancy. You guys front and center when it comes to climate change. I feel like all of us are front and center when it comes to climate change right now.
Yeah, I'm so desperate to ask about California and wildfires because every year that I've lived in this state, the fires start earlier in the year. And this is the discussion. Where does climate change fit into that?
Yeah, we're seeing hurricanes start earlier, certainly here on the East Coast. All right, we'll get to that in just a moment. First up, though, just a reminder of how we finished up the trading day and some of the selling that we saw. Here is Charlie Powell.
Hi, thank you very much, Carol Massar. It was a down day. We did finish well off session lows. Still a down day nonetheless. Do want to begin, though, with earnings. We just heard from the home builder Lennar. Shares now lower by 3.5%. Third quarter revenue, $6.94 billion. Estimates were for $7.25 billion. Again, after ours, we've got Lennar shares moving lower by 3.5%. Stocks did fall the most in about 4 months amid a global rout sparked by investor angst over China's real estate sector and Federal Reserve tapering. Right here on Bloomberg Business Week, Michael Sheldon, Chief Investment Officer at Hightower RDM, said there are lots of reasons for today's selling.
You have COVID, fears about inflation and taxes and tapering, and add that over the past day or two to the events in China and also the debt ceiling. So there's any number of factors that really contributed and weighed on the markets.
At the worst level of the day, the Dow had been down 971 points, down 2.8%. The Dow ended the day down 614, down 1.8%. S&P down 75, a drop of 1.7%, while NASDAQ fell 330, down by 2.2%. 10-year yield 1.30%. Spot gold up $10 the ounce, up 0.6%, $17.65. West Texas Intermediate crude down 1.8%, $70.07 a barrel on WTI. FedEx says FedEx Express, FedEx Ground, and FedEx Freight will increase shipping rates on January 3rd. After ours, we have got FedEx shares down now by 1.4%. And Amazon says it has added 86 new signatories to its climate pledge, expanding the number of companies that commit to aggressively reducing carbon emissions. There are now 200 global brands, including Nespresso, Procter & Gamble, HP, and Salesforce.com, who have committed to cutting greenhouse gas emissions over the next 2 decades. Amazon down today by 3.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great recap of today's day, jam-packed, full of news and certainly trading reaction. Let's get to our Bloomberg News global macro strategist, Vince Signorella. He joins us on the phone in White Plains. So, Vince, good to have you here. What do you make of today? What were some of the conversations you guys were all having?
Well, you know, the conversations everybody was having, to be honest, was, and I think it's probably because China is on holiday and there's one more day of this, they find it really hard to believe that they won't step in with some consolation, some support. That while they were looking to sort of move a little bit towards socialism and away from capitalism, and maybe bring the party back closer to Mao's party, certainly not wanting or expecting anything like this magnitude. And this doesn't do them any good at all. You know, we've been hearing, and what I was looking at as distractions, with pressures on certain industries, certain companies, Alibaba, for instance. Pardon me. And, you know, you think that there must be something brewing that's a little bit more interesting to basically distract people from what's going on. And the property space, the real estate property space, has always been thought to be something of a bubble in China. You remember the huge cities with no residents at all. So it isn't a shock, but I would be really surprised if they didn't come in and try to shore up the situation, because it's becoming increasingly dangerous and contagion-like, and I don't think that's something they really would like to see.
Vince, hang on for a sec. Just want to mention a headline that just crossed the Bloomberg. Shell to sell its Permian Permian interest for $9.5 billion to ConocoPhillips. We just mentioned it during our Beyond the Bell segment. There was some reporting that was going on about this possibly happening. Shell cash proceeds to fund $7 billion holder distributions. So again, Shell International, Shell on a pact to sell its Permian interest to ConocoPhillips. That's a $9.5 billion deal. You know that some of these big major integrated oil companies have increasingly been moving some of their traditional carbon investments, moving out of it, certainly as they continue to get pressure from institutional investors. Shares of the ADRs that trade in the U.S. of Royal Dutch Shell, they're just up about 0.1%. Just want to mention that coming through. So why don't you take it away, Ed?
Yeah, well, Vince, I wanted to ask you, when you say come in with support, do you mean literally policy support, or do you mean somebody somewhere in China just saying something? I think you see analysts from Goldman Sachs right through to Standard Chartered saying they need at least a signal from policymakers to understand how willing they are to clamp down on the real estate market without jeopardizing economic growth.
Yeah, and I think that's the first part. You will see some sort of a statement, I would assume. And then you might see something along the lines of the HARP program here in the United States during the housing crisis in 2008, but for the institutional side more than the retail side. They do want to crack down on the property markets, and that's why they're having this back and forth dance with monetary policy about raising reserves, taking reserves out of the system. It's almost like trying to land, an airplane just on one wheel, trying to just bring it in nice and gentle. A gentle fall in real estate is something I think that they really, really would like to see, but certainly nothing at this level. And, Evergrande has interest payments to make on Thursday.
Right.
If they don't make those payments, it's going to get even messier. And you add in a potential Fed taper, which more people than not still expect on Wednesday. There's a lot of dodgy news down the pike.
A lot of dodgy news, and I know that there was a great story by Rich Miller. I keep going back to it, and I know you did too. We talked with him earlier about the tapering that many are concerned about. It's not coming from the Fed, but it's more the tapering back of all of the stimulus that the federal government has pumped into this economy because of the pandemic specifically. It's been a lot. So what happens to the economy after that? Having said that, we did see buying into the close here, Vince. Was that significant? Just got about 30 seconds.
Yeah, it was that sort of 3:30 algo-driven advance. There was a bid in the market at about 3:30. The old story. The dumb money trades at the open, the smart money trades at the close. So obviously there were larger investors looking to scoop up some bargains into the close today.
Good spot, Carol. You called that hours ago. Nice.
Is the trade, though, until we get through the Fed meeting, do we get some more clarity about the longer-term trend quickly?
Yeah, I mean, well, I don't know about into the Fed meeting.
Okay. Or out of it?
Going on. Yeah.
Yeah, it's true. Nothing's quiet. It's a busy September already. Vince Signorella, thank you so much. Have a great evening. Bloomberg News global macro strategist Vince Signorella on the phone in White Plains. All right, back to World and National News. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Today, President Biden said he wants his administration to look for ways to ensure people are protected from extreme heat. He calls it an imminent threat to millions of Americans. He's ordering an all-of-government campaign to help deal with the effects of climate change, including rising temperatures. The U.S. just had its hottest summer on record. Pressure is building on world leaders to increase their efforts to fight global warming.
It's coming to a boil this week at the United Nations. UN officials are corralling 35 to 40 world leaders behind closed doors to coax them to do more to fight global warming. There's a deadline in just 6 weeks. That's the big International Climate Conference in Scotland. And UN officials say they worry it might fail. This comes after President Joe Biden delivered them the same message last week. The summer has seen a drumbeat of devastating wildfires, floods, heat waves, and hurricanes. In Washington, Ann Cates, Bloomberg Radio.
The FBI today searched the Florida home of Ryan Laundrie, the boyfriend of Gabby Petito, who'd been missing for weeks. A body was discovered at a campsite yesterday on the edge of Grand Teton National Park near Jackson Hole, Wyoming. Authorities believe it could be Petito, who was last seen in that area. An autopsy will be conducted tomorrow. Police continue to search for Laundrie, who is missing. A lawyer for Donald Trump's indicted corporate finance chief told a judge today he has, quote, strong reason to believe more indictments are coming in the ongoing New York investigation into the former president's real estate empire. He spoke during Alan Weisselberg's first court appearance since his July 1st arraignment on tax fraud charges. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So we know it was a jam-packed day. We've been covering the markets. We certainly haven't seen this kind of selling in some time, much more significant, although, Ed, we know it's been a downward trend. We did see buying into the close. Having said that, last night, I was kind of obsessed. No, I wasn't obsessed, but I did watch the Emmy award presentation. Did you watch?
Of course.
It's not just, but it is about the red carpet, too. I was so psyched. Ted Lasso won big time.
One big time. And, you know,
Have you
wherever
watched?
are,
Have you watched?
Have I watched?
Okay,
you know I am a soccer obsessive. I can't believe I just said soccer on air as well. Football. I
know.
And it's been so nice to watch it at
The
home.
UK's calling. They're not letting you back in.
I know. Well, so, you know, for my fiance, she's like, are things really like that in the UK? And that's what I love about Ted Lasso. It does beautifully capture so much of football culture in the UK, and the acting is brilliant. And and it also just reminds us, you know, content is king, right?
Right.
You know, I track so many of these companies, and for them to make such a brilliant show with Apple, fascinating, and the competition with Netflix and with Disney.
What was interesting to me in watching award shows evolve over the last few years, first of all, there's a lot more diversity, so they've definitely gotten the memo, and that was nice to see. But I feel like you go back a few years and we were shocked when all of a sudden, you know, some streaming platform had won in these award shows. Well, now it feels like in the minority is your traditional linear. When there was an actor or show named, I was like, oh yeah, who's watching that? It was just interesting and jarring to me how much streaming has taken over.
Yeah, and I don't want to put a downer on things, but, you know, Apple down 2% on the day. You know, the broader market's selling, I get it.
A downward market, yeah.
A downward market. But, you know, I'm not saying that this is such a huge win for Apple, that, you know, investors are raving as this is the latest kind of line in the sand for Apple's content domination. No one's saying that, but it is a really, really important win for them.
Well, but it is interesting in that they are very careful with some of the content that they're putting out, right, to some extent. But they definitely have a winner with this one to see them win so many awards. I cannot wait for the next
Football is life.
Football is life. All right, you are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for the U.S. stock market. However, dip buyers emerged in roughly the final 30 minutes of trading. Lots of after-the-bell news, though. ConocoPhillips acquiring Royal Dutch Shell's Permian Basin assets for $9.5 billion in cash, accelerating the consolidation of the largest U.S. oil patch. Shares of ConocoPhillips after hours down now by 3.6%. Homebuilder Lennar sliding after its outlook for new orders disappoints investors. Lennar shares after hours down 2.8%. Robinhood is testing a crypto wallet and cryptocurrency transfer features. Stocks fell the most in about 4 months amid a global rout today sparked by investor concern over China's real estate sector and Fed tapering. Two-day Fed meeting does begin tomorrow. S&P down 75 today, a drop of 1.7%. Dow Industrials down 614, down 1.8%. Nasdaq down 330, a drop of 2.2%. 10-year yield 1.31%. Bitcoin plunged today by 9%. Gold up 0.6%. West Texas Intermediate crude down 1.8%. $70.07 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you. So our next guest is a climate atmospheric scientist. She's been studying climate change, analyzing the data, the models. You may have even seen her TED Talk. She is the chief scientist for the nonprofit and global environmental group. It's the Nature Conservancy, and she notes that our future, it's in our hands, one where we can choose between mitigation, adaptation, and suffering. She is Catherine Hayhoe. She's got a new book out. It's entitled Saving Us, a Climate Scientist's Case for Hope and Healing in a Divided World. And she joins Ed Ludlow and me on the phone in Texas. Catherine, great to have you here with Ed and myself. Tell us about your new book.
Well, thank you for having me. My new book is about how the most important thing that any of us can do about this huge global issue of climate change is to use our voices to talk about it, because we're not. Only 14% of people ever talk about it. And if you don't talk about it in your company, your business, your organization, why would anybody understand how it's already affecting us today, including our bottom line, and how every single one of us can help to be part of the practical solutions that are already being implemented today as well?
As part of your book, you surveyed, you interviewed, you polled all people from all walks of life. What did you find out?
I found that most people are already very worried about climate change, even where I live here in Texas, the home of the oil and gas industry. But people don't know what they can do. And so because of that, we're not even talking about it. So that's why it's so important to break that silence and to talk, first of all, about how it's already affecting our bottom line. We're seeing a sea change. A lot of businesses are recognizing that climate action aligns with their goals, that the consumer wants to see what they're doing, and that the risks are already affecting us.
Hey, you know
there's already many businesses that are taking action, too. Sorry, go ahead.
No, you know what I was thinking, though, Catherine? It's interesting. Coming off of the pandemic, we are reminded so much about taking a vaccine isn't just about protecting ourselves, but about protecting our community. We've had to think, beyond ourselves in a big way. Climate change, that is the case, too. I understand that you stress not focusing on the facts, but on shared values and common ground. How do you expect we get there when there's so much infighting, certainly politically in this country, politically in other countries? How do we find that common ground, which is, crucial to really our existence as human beings in the future?
That's exactly the question, because climate change is, and has been for the last 10 years, the most politicized issue in the U.S. So if we can come together on this, what else might we be able to fix? How do we do that? Start from the heart. Start from what really matters. So what matters to your business? What matters to you personally? What matters to your consumer base? What values do they have that are being affected by climate change today, because it's already here and now, and that climate solutions would genuinely and immediately and practically address? Often we can agree on climate solutions without even mentioning the words climate and change in sequence.
Catherine, let's give a specific example on this so we can help the audience understand. In California, where I am, the most visible debate that we have is the wildfires. They seem to be hitting earlier every year with more severity. And there are many that say this is the most visible evidence of climate change we have in the state. How would you approach that issue? How should people discuss the wildfires here in California?
You're absolutely right. That's what we're seeing in California. In other places, we see hurricanes becoming more intense, flood risk increasing, and of course, deadly heat waves. I would approach it as a mom by talking about how some of my friends who live in California and Nevada, they couldn't even let their kids outside to play for not just days, but weeks at a time because the smoke was so bad. My cousin's house burned down, and that really happened. And we all know people have been affected. So I would start with something that we share. And then I would say, hey, did you know that one of the most important things we can do is talk about it? Because here in California, we are the #1 producer of solar energy, and all the new homes that are being built are required to have solar panels, which makes us energy independent, as well as not contributing to all this carbon pollution that's causing the planet to heat up, making our wildfires worse. So tie the issue directly to our personal concerns and directly to solutions that are happening right in front of our eyes, not on the other side of the world.
You know, what's interesting, though, Ed does, I do, we talk with a lot of companies and institutions as well as investors. A lot of companies and institutions, Catherine, are putting out targets for being climate neutral and so on. A lot talk about sustainability, and yet the climate numbers show us we continue to go in the wrong direction. As Ed mentions, the fires out there on the West Coast, early hurricanes here on the East Coast, the flooding that we are seeing in so many different places also around the world. I mean, is it too late? You track the data. I got to go back to the data for a moment. Is it too late?
Oh, yes. I do track the data. And the way I look at it is this. It is too late to avoid all of the impacts because some of them are right here today. The ones you referred to, we're seeing them here and now. It's sort of as if we've already been smoking for years and even decades, and we have some impaired breathing. We have some spots on our lungs. But we don't have emphysema, we don't have lung cancer, and we're not dead. So when is the time to make a change? Right now. Because I can tell you without a shadow of a doubt, as a scientist who studies the future and who studies the impact our choices make today, that our future is still in our hands. And what is at stake is not the planet itself. What is at stake is our civilization as we know it. We still have the chance to save ourselves. And so that's why I called my book Saving Us.
But Catherine, very quickly remind us, why is this less confrontational approach better than the facts and the data?
Well, facts are important. I mean, obviously, they explain the way the world works. But we scientists have been sharing facts for decades. And today, much of the debate in the public sphere centers over, is it warming or not? How much is humans? How much is not? And we know the answers to these things. We've known that it is real. We've known that it's human caused. We've known the risks are serious since scientists warned the U.S. president in 1965. So rather than getting stuck on the facts, we need to understand the real problem. Nobody thinks it matters to them personally, and nobody knows what to do about it.
Catherine, just got about 25 seconds, 30 seconds left here. Are you banking on a younger generation who, I know my 18-year-old keeps reminding us the bad stuff we've done for the environment and promises change. Is it the younger generation that really moves the needle on this? And just quickly.
They would, but we don't have time to wait for them. We have to join them too. And again, it's not about the environment. It is literally about us.
Existence. Listen, we got to leave it there, and certainly another thing to think about on what's been a jam-packed news day and thoughtful day. Catherine Hayhoe, her new book, Saving Us, a Climate Scientist's Case for Hope and Healing in a Divided World, joining us on the phone from Texas. Ed Ludlow, it has been a pleasure. The only thing that would have made it better is to have you here with me.
I know. And when COVID goes, it will happen, I promise.
Yeah, brutal. And it's only Monday. We've got a Fed meeting. We've got a lot of stuff to get through. I'm really going to watch what happens in China and see whether or not Beijing comes in and really kind of shores up Evergrande, does something significant.
All eyes on policymakers, simple as that.
Which has been kind of the story, right, of the last year and a half in a big way. Ed Ludlow, you have a good evening. Of course, our West Coast correspondent there in our San Francisco bureau, Ed Ludlow. I'm Carol Massar for the whole Business Week team. Have a good and safe evening, everyone. This is Bloomberg.
traders, I'm planning to trade Canadian dollar.